the go live. So I'm on both sides now. So I'm on for a half an hour, and I was supposed to do about historical trends. And, things have changed a little. So I thought what I'd do is show you tells and the tells we used this morning to make money. But I also thought the historical trends, the easiest thing to know is April is the strongest month of the year. On the other hand, you have banks failing. So, there are a lot of different things about this. Now, the one thing I thought, and I screwed it up, so I'm not perfect at this, is this would affect the NASDAQ stocks the least. And as you see, the NASDAQ's up and the ES is hardly up. So just keep that in mind in there. But what else are we doing? When I watch all these things, the first thing I'm watching is the VIX in a day like this. The high yield, the VIX, the regional banks, the advanced decline, and the bond market. But number one in here is that. Number one is the VIX because it's been going nuts. So you're going to see that if I showed you this, you're going to see that when it sold off, the markets rallied. When it went, and you see markets went up, then when this rallied, markets went down. When this sold off, mainly the NASDAQ went up. So just keep that in mind. At least that's what I'm seeing in here. So for the moment, you got to watch that VIX. And as you see, it's up here now, right here. So the problem with that is, like I said, I really, really like to use tells. And that's why, I didn't trade the text very well, traded most of the other stuff okay. So we did a lot of spreads to try to take advantage of volatility. And at the moment, they're okay. Not great, not bad, but the broad market, like the Disneys, just won't go up. Now, the reason I thought they wouldn't go up is because number one, the bond market's way up, oil's way down, Bitcoin flight to quality. I don't get that, but that's the way it is. You see the growth oriented index, the Russell down. So people are thinking that all these banks that are falling apart is going to cause a recession and that the Fed is going to back away. So, that's all fine and good. So you're like, yeah, cause a recession. That's why Disney's going down. But then on the other hand, you have Deere up. That doesn't make a lot of sense to me, but Deere did get hit on Friday. It was roadkill on Friday. So the way I'm looking at this is I'm just trying to find reversion to the mean. Now, tomorrow's the CPI. You don't know what's going to blow up tonight, if anything. So you're nervous about, give me 1 second. Yeah, you're nervous about, you can't chase the market. Let's just put it that way until everything's fine. And now what's happening is you're getting Schwab, which got Schwabbed earlier, is coming back, which I didn't know why that was down in the first place, but you're getting JP Morgan to go the other way. And you might ask, why on earth would JP Morgan? I thought everybody is going in and depositing their money at JP Morgan. Well, it's sort of counterintuitive, but if the other banks stabilize, then this that had unusual strength is probably going to go down. So, just keep that in mind. At least that's what I'm seeing in here. And so you see that we're reverting. All I mean by reverting, and not like the Fly movie, we're reverting back to unchanged. Look at the SPX, just unchanged. Almost. So unless there's some other blow up, you think it's going to be unchanged. So then you got to go back. And I'm telling you that this is how I'm looking at it. What made the overall markets go down was the regional banks getting nailed. So the regional banks started coming back. That definitely helped the overall market. So that was your first tell to use today, other than the volatility. Now, why would you use the volatility? Because basically that trades 24 hours. As you see in here, it's still, you're not sure yet. You're not sure if that's going to make a bottom. In my humble opinion, I don't know why it should make a bottom, because everybody's scared to death about what's going to be the next shoe to drop. On the other hand, the NASDAQ's holding up. So definitely holding up. But what is making what are the mechanics today? The mechanics is everybody's watching the KRE. That's a regional bank ETF. They're watching also high yield. So high yield earlier looked like it was going up. This is the high yield bond ETF. And as you see, it started falling apart. Not really. It's down 26 cents. But the point is, this is sort of a sign of recession. So that's why a lot of people watch this. So that's why I know I'm throwing a lot out, but that's why we have multiple screens to watch. So it can be HYG, the regional banks, then you can put stuff up like Schwab. So, I mean, if Schwab has another leg down, yeah, that's going to be bearish for the broad market. So I just wanted to show you all the tells of what we're watching. So as you see, the bond market now is having another rally, which means probably the VIX is having another rally. Yeah. So you see they're moving hand in hand. The other thing is, even when the ES went nuts on the upside earlier, the advanced decline on the upper right did poorly. So really, everything changes every day. That's why you need me. So that's why, I get subscribed. VIX and the bonds, because they're flight to quality. So bonds, if you're in a regional bank, you take your money out and you go put it in treasury bonds. So even though that's how SIVB got in trouble, that's theoretically the way you do it. And so it's a flight to quality. So you get out of stocks, you get into bonds. The VIX, instead of getting in stocks, they're buying puts. So to protect themselves. So that's where you get all that of why the bonds and the VIX are going together. They don't always go together. Like, I like that if bonds rally, it's good for the markets, but things changed. This is a different rally. It's not because inflation's gone. It's because of a panic, basically. So we could actually put this next to each other. Have it like that. I could put the Russell back down there. And all I'm seeing in here is long term. I have no idea in KRE because I don't want to open my mouth, because I just don't. I think it's uninvestable. Now, you might say, yeah, but there are a lot of regional banks that look great. And that's a good point. But if I'm even going to think of playing KRE, I mean, the usual way I play something like that is I don't try to buy the dip. I try to wait until it crosses something on some time frame. Because of this damage, you might say, well, why don't we just go into April and buy a call spread? And you could do that, but we don't know if it's made its low yet. So on an hourly chart, the only thing going for it is it's way too far from any moving averages on an hourly and on a daily. That's the best thing it has going for you. So that's about it. Now, on the other hand, so you asked about the bonds, and Jimmy, I got to tell you, did you see that I rolled out of one and into another? I just want to be sure you saw that. But longer term, if the banks stabilize and the bonds stay up, heck yeah, that's good for the market. Look at this. So, I've obsessed about this. Now, I'll show you with TradingView about the bubbles. Every time I'm on, I talk about these stupid bubbles. And let me just show you. So basically, the market's gotten killed because the Fed is tightened and it's made the bond market go down. So the whole thing about there's nowhere else to put your money you've heard for 10 years isn't like that anymore. So now what you have is this. So that right here, I'll show you the bubble because, I mentioned it before. So you have that right there. That's the beginning of the year. On the right, you have the bonds, which earlier were there. So we were worried about the ES. Well, now the whole thing comes down to the bond market is rallying because of a flight to quality and also because of all this economic stuff going on. I mean, bond stuff, that people are thinking the Fed isn't going to tighten anymore. So that's another reason the bonds are up. But once all this blows over, all of a sudden, the bond market is on its high, which is like the ES being at least at 4,000. This is the last time the market, February 3rd. So I'll take this where it's not an obnoxious cross. There, February 3rd, if you look at the bottom there. So where was the ES February 3rd? Yeah, right there. So I'm just telling you that if the T-bonds stay up somewhat, yeah, they're real overbought. But if all this systemic risk sort of dies down and this doesn't go all the way back down, yeah, this could go all the way to here. But there's so many ifs right now that I'm trading ultra short term. So I just want you to know that, and trying to take advantage of volatility. So as you see, the bond market has stayed up. The VIX, now that's a mess on a chart. But you see, nothing is really selling off yet. The VIX, the bonds, and the advanced declines aren't really going up. So the whole point in there is that the instability is still there. So that's the danger in here. So that's the danger to get in too early. And at least that's the way I look at it. Now, there are things you can do. And we do them on the Chart Patterns Mastery and put in trades like trying to take advantage of volatility. But the biggest thing I wanted to show you is when you have a kind of systemic risk, there are a couple of things you have to do. So here we go, going up right when I say systemic risk. So I can't even say that. So many, it's hard to pronounce. But this is the way I look at it. I've been doing this for a long time, so I've seen this systemic risk kind of stuff. So the first thing, and I got to go over this, is you have to have multiple platforms. I can't tell you how many times that all of a sudden Thinkorswim or Schwab goes down. So you got to be extremely careful about putting in orders. That's number one. Number two, you got to have your phone ready with the platforms. As a lot of times, if this goes down or Schwab goes down, the even their website, if you go on internet, is down, but their mobile app will work. So I'm just telling you, we've seen it before. So you bet, I just thought I'd point that out. So as you see, Schwab's trying to come back. And I've tried to call him on the phone before, and it's not that easy because you have 8 million people trying to call him. But definitely if systemic risk sort of dies down. So remember on last time I was on Friday, we were talking about do not buy the ES when it's overbought. So that was here that we were talking about do not buy it. That was that arrow that I showed. Don't buy an overbought ES. It was actually on a 15-minute chart. So we were showing this. There's your second peak right there. Look at that overbought. So the reason I'm mentioning it now is because the bonds are overbought. And it's all on how you work off the overbought. I mean, at least that's the way I look at it. Now, they can stay overbought when you have this systemic risk. But if the bond market can stay in this area, and work off this overbought by staying in that area, in the long run, that's great for this. But we're still not done with that, all that systemic risk stuff. So that's where we are right now. So, well, it's already sold off. I just thought it would go back to unchanged. So, which is sort of where it is. So, because the bond market isn't really selling off, like you see on the upper, on this right, let me take off the little crayon and put an arrow. Give me a second. There. As you see, it hasn't really sold off. It did earlier. How about the VIX? The VIX hasn't really sold off. So when I talk about taking advantage of a high vol, well, you see what we're talking about, but the uncertainty is still there overnight. So that's what I thought we would sell off. Now I'm not sure if we're going to go lower. I think a lot of the tell is going to be the NASDAQ. And if the NASDAQ can hold up like it has, maybe that'll hold up everything. So that's what I'm watching in here. So that's, I think you already had that reversion, Jimmy. And, you know, if you're trading futures, sure, that could be something. But if you're going to trade futures when it's been crazy, you have to use a 1 minute chart of either the SPY, which, as you see, you would have gotten stopped 8 million times, or the ES. Now, when it's this volatile, I usually don't use a 1 minute. I'll use like a 2 minute. That was easier. That way you don't get chopped up all day. So right there is extremely tough when it goes down that fast. It's almost impossible. So, you know, I was kicking myself about it, but you know what? It ended up okay. So then you're like, well, what else do I do? Well, number one, you got to think this is going to stay in this zone unless there's some other Fed stuff. So you got to think the CPI isn't going to matter that much because of the bank stuff. So I'm just on the fence right here of what to do now. So I had a good read of what I thought here, that it would come back to unchanged. But now I think it comes down to this. You got to watch this Russell, which is falling apart. So you got to watch foreign markets that are falling apart. But intraday, if you're just on the site, you got to watch this KRE, the HYG, and you see what's going on. They're holding up. So definitely that's what we have to watch. Tesla, no idea here whatsoever because of the whole market, you know, sort of like contagion. So I still think, sure, we could say that the 50 moving average matters. I got to be sure that's the 50. I always double check. Yeah, that matters. So, and it's oversold, but they can stay oversold like you see here. So if the markets don't stabilize, you got to think this can fill the gap. But at the moment, I cannot tell. The only time I trade Tesla is if I see defined bull or bear flags. Believe it or not, it had a bull flag today. Believe it or not. I mean, I know, you know, it had a bull flag. Now, is that a bear flag? That's a tough call because the NASDAQ's going up. I don't know. I cannot tell in here. I can't do a long-term position because you worry about this gap filling. So, I mean, that's the way I'm looking at it. And that's where I am. Now, on the other hand, like I said, if this bond market stays up and the systemic risk goes away, well, heck, all of a sudden you've had a massive bond rally, which is good for the overall market. But, you know, you got to see the bank stabilize. That's how it looks to me. So if the bank stabilizes, that's a big if. I mean, I don't know if you saw like Comerica. Wow. It's already been 30. I don't know why you get to a big thing like that, but they did, whoever they is. So it was 29. So here's another stock you could put up here as a tell. If you don't want Schwab, which is now stuck here, you can put up CMA. Now, Schwab, I gotta think, barring any news, and see, this is the problem, Jimmy, exactly what you're talking about. This stock is getting killed and really hasn't come back much. Do you really want to be in this overnight? So this is one of those things you probably get out overnight, and if nothing happens, you get back in tomorrow, because this has had massive moves. So that's how I would probably play Schwab. Tesla, I'm not sure. If I had a better feel, I'd tell you, but I don't have a better feel on it at the moment. So, but if the markets, because this is what a bottom usually looks like. So, but that's what you could have said here. So usually what I do is I'll go to like a 5-minute chart. There you go. Boy, does that look a lot better than it looked before. So everybody wants to buy here when you get yourself smacked. So you wait for some kind of positive move. Now, we bought here on that bull flag, and it was over the ATR trailing stop. So now you can play it like an algorithm, all of these stocks. If they get under, you sell it. If it gets over, you buy it. But I can't do it with these news-related stocks. So, I mean, that's where I am right now. The SPX, while this isn't going up, maybe you could play Tesla on the short side as long as you have a tight stop. So that's something I'll go over in the chart patterns mastery room. Because while the market was going up, it didn't go up. So the tighter the pattern, the tighter the stop. That's from my chart patterns mastery room class. So just keep that in mind. And we're having on March 15th, where I'm going to go over pre-market action and how it can help you prepare during the day. So that's something special for the chart patterns mastery class. Doing it after the close, just a special hour session. So I'm excited about doing that. That was my idea because I'm always looking at the markets. You see what I see in Tesla. If you mess around with this stock, I mean, just from a theoretical, you mess around in here with a tight stop, or you mess around if it breaks and then forms a little bear flag under it. So for me, there's too much news related stuff. I'm probably not going to do anything, but I just want to let you know what I'm looking at. So that's what I'm looking at when it comes to Tesla. Now, the other thing, you got to look and say, are any of these stocks on the bottom left, my main list that's way up, are any of those sort of like might have their money in treasuries? Well, they have a big cash flow. They don't have withdrawals. So that's why they're going, whoever they is, are going for the software service. And there's another reason. These software service got nailed when interest rates went up because it's all about valuations. So these get nailed when interest rates go up because they have a high price sales or high price earnings. And so you have to like lower the price earnings. So now that the bonds are rallied, though, I got to think this is the group to go for. I missed it this morning. Not thrilled about it, but look where it's come from. Yeah, from 500, almost 590. So I'm not saying to buy it this second. I'm saying that if we do have a rally, it'll probably be led by stocks that like the bonds going up. So I just want to tell you that. it. CPI, we're asking about would we sell off? Well, you got the CPI, you got that you don't know if the next shoe's going to drop. And if I'm going to play KRE or anything like it, I have to wait for a better pattern. That to me is not a good pattern. Now, if it gets over this, sure. But I don't know who in their right mind wants to be in it overnight. So this is going to be one of those things that it probably goes up in the morning if there's no blow up. It probably goes down right now because everybody's nervous. So, I mean, that's the way I'm looking at it. So as you see, the market's just sitting here. Now, the one thing you might say, well, it's sitting here, then the volatility should go down. Not in this type of environment. In this type of environment, the volatility is going to stay up because it's so news related. As you see, bonds stayed up, crude oil stayed, VIX stayed up. Now, the curious is the flight to quality to Bitcoin. I'm having a tough time with that. I'm just having a tough time, but you don't fight it. And just keep that in mind. You don't fight that kind of thing. In fact, if you play Bitcoin or anything that has a massive move like CMA or Schwab, if you want to short this because you're like, this is the stupidest rally I've ever seen, you have to wait for some kind of cross on some kind of time frame. So like this. So let's just say you're like, this is the stupidest rally I've ever seen. You can't go near it unless you go to an ultra short time frame and then find a little bear flag. And that's not even a given. But the whole point is the reason I have these ATR trailing stops is it keeps you from shorting too early if you're opinionated and getting your head handed to you. So just keep that in mind in there. Definitely. I still think it's stupid, but I've done that a lot in the past and I don't stay with what I go on and I lose money. So you got to have some sort of, some reasons. Now you could do this and say, if that doesn't hold, it could go to there. The problem is a lot of times with Bitcoin, this happens overnight, and I don't think you want to take the risk overnight. So that's where I am right now. And as you see, the regionals went down, the JP Morgan stayed up. Down here, I'm going to put Goldman Sachs. I think you have a tech stock, you have a Goldman Sachs and a JP Morgan, and you could put Deere up here. So let's see if it keeps bucking the trend, so to speak. So everybody's talking about now a recession, because of all these banks. And why would Deere be up? Well, it got killed on Friday. So that's probably one thing. But the usual market trends are going to be, usually you start going up into April, but so much depends on news related stuff. So let's go over this real quick. If I go to this, now let me just tell you, you got to think Chinese stocks. If you want to go somewhere, the government will backstop everything. I mean, that's the way I look at it. Could be dead wrong, but that's the way I look at it, that the government might backstop everything. So that's a place maybe to hide, but that's dangerous if the whole market goes down. But I wanted to show you this. So if you take the Russell 2000, so 2000 stocks, the worst are the banks, but how much? And the next thing I do is I look over here. So all I'm doing is going to public and I'm going to Russell 2000. And then another way to do a tell are these financials. You see, it says financials. Are they up a lot from their low? So this was 13 and now it's 26. Amazing. I mean, it's still down 50%, but I look at that a lot to see if things are on their high or on their low. So I have to go. I hope you found this interesting. And like I said, is if bonds can work off their overbought by staying up near their yearly highs, eventually that'll be good for everything. That's a big eventually. So just want to let you know that, and I hope you enjoyed it. So take care.